Happy Monday, ladies and gentlemen. This is Zach with Achilles Financial, and we are back with another earnings preview. Today, we're going to be looking at a personal favorite of mine and one that I do hold shares in, albeit only two. And this is a stock that I've been talking about since it was well below $60, $70, and it is Taiwan Semiconductor Manufacturing. And they are announcing earnings this Thursday, so that is going to be later this week on the 15th, and I want to talk about why I still think that there's opportunity, even though that they have had a awesome run up even over the past 5 days, and you can see that spike up even just over the past 5 days. So one of the things I want to highlight is the whole market was up today, largely resulting from their feedback from Apple having its 5G report tomorrow. So Apple is having a big event talking about the iPhone and their 5G exposure. So why does that bode well for TSM? Well, TSM supplies a lot of the semiconductor information for Apple, as well as some of Apple's other uses or other not competitors, but rather the other chip makers. Let's just name a few of TSM's customers. That would be AMD, Apple, Broadcom, Marvell, MediaTek, Nvidia, Qualcomm. There's a few others that use them, such as Xilinx and Altera. Now, why are those two important? Well, AMD just talked about a potential buyout for Xilinx, and if I'm botching that pronunciation, then that is okay. I apologize, though. So what are we going to look at for this week? How do we have an opportunity here? As you can see, we saw this big run up. I still think that there's potential here. Again, I have two shares. I do want to get more, although they are expensive, but I think this is a stock that's going to continue to do well. One of the things I like about them is they do offer a dividend. Again, in a video, this was probably 3 months ago now, I like to get paid for my growth portfolio. Now, I wish I had probably gone after them a little bit more aggressively instead of Pfizer. However, that's hindsight is 2020. Pfizer does have a lot higher dividend. But when I'm looking at this stock right here, I like that they are paying a dividend because that means that they expect steady income. And this is a company that has not had any problems when it comes to steady income. As you can see just through some of these charts, I'm just going to look at some of the balance sheet information. You can see that cash has stayed pretty much steady over the past 4 quarters. The reason that I am okay with that is because, again, we are still in the midst of a pandemic, and they still held on to a lot of cash. Why is that okay, though? Because let's look at some of the income that they're bringing in as well. The revenue is staying on that steady uptick, and if we look at it in annual, you can see, look how consistent this is, look how steady. The important thing that I want to be looking at here is that despite the fact we're not rocketing growth, it is always going up, and they have a lot of very strong, very important clientele that utilize their services. The other item that I would like is when you look at some of the industry averages, they're not necessarily well and above most of the industry. And this is the chip conductor or semiconductor industry has a lot of high flyers. And so when you're looking at a company like this, I mean, this is a stock that if we look at my holding, I'm at like 10% growth on my all of 2 shares. And those 2 shares were purchased like a month and a half ago. There is a lot of value here. I think that this is one that is on sale compared to the industry. You can see on a PEG ratio, price to book ratio, price to sales, as well as price to earnings, they are lower than the industry average. And this is, again, a high flying industry. So there's still a lot of value here. The other thing that I would highlight is they are incredibly profitable. And again, the reason that this is important is because they have consistently been a growing revenue stream. And the reason that that's important is because they are very profitable. So as revenue grows, profit should stay the same, if not increase, because they can scale. So I'm a big fan of them. I like this. So if this is an earnings preview, what is the value and how do we play this? So again, we've got a lot of people saying buy, buy, buy. A lot is going up. But when we look at the value over just the past few, or even just the year to date, you can see that they have continued to leap up. My concern is, have they gone up too far? So what I'm looking at is for time. However, time means we do have some issues here. So I'm going to show two different plays that I'm going to be looking at really tomorrow, probably to get before the Apple event. As you can see, I've switched over to the web version of Thinkorswim to evaluate this play. What I'm going to be looking at is using an option trade, and there's two different ways that I want to approach this. One is I want to get a little bit of time and do a pretty out of the money bid here. And by pretty out of the money, I'd say 105, 110. I have looked at the 110. My concern with both of these is you can see that there's a pretty big spread here. So what I did earlier just to look at this is I looked at the October 23rd and I was looking at, well, what are they actually selling for? And the way that you can do that is you can see the bid and the ask, how much people are actually like going after that. And you can see that this far out of the money, that there's not a lot of people who are actually purchasing this. And the reason for that is, again, because it is far out of the money, but I think there's an opportunity here if we continue to see some of the run up here, even though this is only about a week and a half away, or really right at 2 weeks. So if we can capitalize, and if they make a 10% move over the course of this week, we should be able to sell out at a profit. But again, the whole market's up right now. All it takes is one thing to make that come back down. So when I'm looking at this chart right here, what I'm actually going to be doing now is figuring out, well, how can we maximize our value here to where our profitability curve doesn't look like this, even though I try to tag something around $100 where, again, you can profit. So what am I going to be doing? Well, instead of banking on this, what I'm actually going to do, because I am still bullish, is I'm actually going to be looking a little bit shorter term. And what I want to do is sell the puts. So right now, stock's trading at 90.91. I would be more comfortable with something like this, where we're going to look at the 87.85, sell the closer one, buy the one farther out, and make sure they're both puts. You can see that this is a $16 opportunity. $16, worst case scenario, $34. This takes $50 to do. So, and that means with $250, I am able to sell this using that $250 as collateral. This is an $80 that I get to keep no matter what. I get $80. However, I'm using up to $170 of my leverage. So there's that $250, and I get $80. So the worst case scenario is $170. But this $80 is pretty high probability, especially for a bullish case like this. And that's going all the way down to 87. So if we want to look at that, you can see, again, the end of the week on the put side. So we want to be over here on the right-hand side. The options I have selected right here. It says 28%, it says 24%. However, I'm not necessarily that bull or that bearish. I think that the upward momentum is going to continue, particularly if we have good news with Apple tomorrow. Again, Apple is a customer. If Apple does well, then TSM will do well. So the opportunities here, and this is going to be the safer of the two, is an end of the week call where you get $16. So the other side of that is what happens if you go farther out, which I traditionally don't like to do. As you can see, going all the way out to the end of the month, which is really tripling our time, you're only getting another $5, $6 for each one of those. And that's not necessarily my ideal scenario, but for that same $250, you can get $110, and your only risk is $140. Although I do want to highlight, you have to wait until the end of the month, and that is a long time for this being that close to the money. But this is some of the opportunities that we have. Again, I'm a big fan of TSM. I think there's a lot of value with this stock. So please check it out. Check out some of the potential going into earnings at the end of this week, again on Thursday. If you have any questions, please drop those down below. Or if you're going to be making a play, I'd love to hear it. In the meantime, if you found this video helpful, please leave a like and subscribe. Thanks.